Economic growth numbers come out today and the impact on interest rates. What will actually push the stock market up going forward? And Bill Shorten wants to give you all wage rises. I'm Peter Switzer and...
I'm Paul Rickard. And we're mad about money.
Screwed up that intro, Paul, but the whole point of the exercise is to talk about important money issues. And today we get economic growth. If it's small, will the Reserve Bank cut interest rates?
Look, they're not going to cut interest rates. I was also going to say, Peter, you're probably the only one in Australia who's really interested in this subject. But look, it'll get
interest
traction.
Rates are important. You have so much money.
Not interest rates.
He lends money to himself. He's so rich.
Not interest rates, of course, but obviously the growth number. I mean, look, if the growth number is really bad, or we technically get into recession, the pressure will go bananas. But you're right. I mean, the economy has slowed a little bit, and I guess if it's worse than expected, it gives us a bit more impetus to Governor Phil to think about cutting rates, but I don't think he's going to, Peter. I actually don't agree with Bill Evans and Shane Oliver and some other economists who think rates are coming down. I think rates are on hold in Australia. Yeah. And I reckon this is going to end as the record period for the most number of months when the Reserve Bank doesn't change the cash rate.
Well, it's 31 months now, but Paul, has it been longer in the past?
Look, I don't think records go back that far, but we always can break a new record, Peter, and I think this is a period. I mean, the reason for me is I don't think an interest rate cut will do anything, so I don't think there's any point. But again, conversely, he doesn't want to push interest rates up because if interest rates go up, that will create some more issues in the home market.
Could banks ignore a Reserve Bank cut at this vulnerable time in the economic cycle?
They could, but unfortunately banks get squeezed a bit when interest rates are so low because there's so many depositors who are already getting that big sum of 0% or 0.01% on their deposit rates. And if interest rates go down, banks, you can't make zero negative, you know. So it's actually hurts bank profits for interest rates to stay so low for so long. But look, I think, let's get a read on the economy. I think the other thing, Peter, we've got to say is we're coming up to an election, and that's going to should be a little bit negative for the economy.
Yeah, it does slow the economy, yeah. Okay, so Paul, we've seen the Fed, they've said no more rate rises. Well, they've implied that. Market went up. The trade Trump war with China looking better, and the market's going up, and you reckon that a lot of the gains already been factored in, and then reporting season and all the dividends we got, they've been good for stocks. What's left to push the stock market up?
That's a good question, Peter, and I guess the full impact of the dividends hasn't been received yet, so there's going to be lots of payouts over the next couple of months, and we'll see that cash coming back into the market. Yeah. A lot of fundies have been caught out by this rise. The market's up over 10% since this calendar year, just in 2 months. A lot of fund managers, some quite high profile, got a bit bearish late last year and told you they were increasing their cash exposure. They've been a little bit wrong. So there's still money to come back into the market. I guess we're now in sort of that holding pattern where I think electoral risk is going to be a bigger issue in the next couple of months, and maybe the US, the good news is there and things are going to get a bit tougher. So I think there's quite a few people like you and I are just sitting on the sidelines waiting for a bit of a sell-off. And I think that's probably the way to play the market now.
Yeah, I'm going to say I'm really happy. Switzer Dividend Growth Fund went down to $2.23. Madness. Now $2.51. Anyone who jumped in then got a really nice return. Anyway, that's enough about that. Bill Shorten wants to turn the election into a referendum on wages.
Yeah, Bill's big on this, and there's a lot of really erroneous data out there saying that people's real wages have gone backwards. It's not the case. You know, CPI is the measure of inflation. Yeah. Wage growth has always been higher than inflation, notwithstanding what the press, ABC media just doesn't challenge these statements that people are, that wages are going backwards. Yeah. They're not going backwards, but
they're not very fast.
They're not going very fast, and I guess this is another one of these policies that are going to have a lot of support in the community.
Oh, I love it. Everyone wants a wage rise.
Everyone wants a wage rise. I mean, I think the question we've got to weigh up here is this really going to help us in the long term? It will certainly, look, there's no doubt there's wage inequality, and I'm happy to say that I think there's some people at the bottom end who need more help.
And women.
Yeah,
definitely.
But, again, some of these policies is Bill playing to the electorate, and the question is longer term, are they going to be good for the economy? This is the electoral risk I think the market is going to focus on a little bit.
And Paul, the reality is a lot of the people who aren't getting wage rises have contributed to their own problem because they're buying online. they're not going to restaurants, they're getting Deliveroos and Ubers and all that sort of stuff. So it's hard for a restaurateur to pay higher wages. It's hard for a retailer to pay higher wages because they're competing, and also people are competing with Bangladesh and India and Philippines and Africa for lots of white-collar type, back-office type jobs. And they used to employ people, and so wage rises are very hard to give.
Well, I think people forget that that it's although employment is strong, it's not a question of people with jobs. I think there's just so much disruption from
digital
new technology that companies can't increase prices. That's why inflation is so low.
Yeah.
And if anything, the pressure, you mentioned the pressure in the retail industry or pressure in the food industry, the services industry.
The journalism industry, journalists are being paid less. I used to get paid $1 a word when I was a young writer. Very few people are on $1 a word nowadays.
So nobody's got to accept that. Look, anyhow, I think, as I said, coming back to what it means for stocks and markets, we're going to see more of Bill pandering to. I won't say pandering is a bit strong,
that's nasty, Paul.
But at least coming out with some ideas that are going to be
good for him
popular
being elected.
electorate. And this, unfortunately, just heightens. I think the market's eventually going to say, "Yep, we're going to have a Labor government." There's some negative stuff here that's going to happen. So this is what you got to factor in. I just think it's a slightly higher risk time to be investing over the next couple of months.
I think that the interesting point is that if Bill increases wages too quickly compared to how fast we're growing, he will actually increase wages, but he'll kill jobs. So some people might have got a pay rise if they kept their job, and that's going to be very important this year. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.